Welcome everyone. Good morning or good afternoon, subject to where you are in the world. I'm just going to do a update on Chartwell Plaza, much anticipated and awaited update on Chartwell Plaza. So we're going to do a completion update. These webinars have been primarily updating clients on that are purchasing, and we're showing them ongoing works on site. So this is a slightly different presentation today because obviously we're now build complete finally. There is some obviously some images and then some housekeeping just around sort of the next steps and whatnot that we'll run through. So we'll press on. Okay, so good news. Building control certificates, safety certificates, EPCs and EWS ones are now issued. Obviously we can there'll be a Q&A at the end and we'll touch on sort of where we've experienced delays, and obviously it's been a challenging site this for numerous reasons, but the good news is we're now there. So and obviously appreciate you guys for bearing with us, and obviously I think certainly the end product was worth the wait. And we've seen good news in relation to capital values, good news in relation to increasing rental values. So we are very much hoping that the journey from now will be a good one. And certainly, as I say, from a product perspective, it certainly turned out very well. And so I think we've over delivered at least on the specification and final feel of the units and the building as a whole. But obviously we're very mindful, and I can only apologise further for the delays we've experienced today. So we are waiting final cover notes. So we do everything we can do with all the certification that's been received. A copy of those has to go to the warranty provider, which is a 10-year NHBC equivalent. In this case, it's build zone. So we're just awaiting those, expecting them any day now. So, but yeah, so then completions will commence fully then. So lettings already commenced. So there is an element of the building that's been retained. So where obviously not any direct ownership by clients as yet, but for any units that are being retained, we have started the lettings process. Had huge demand. We've been seeing some really good, strong rental values. So yeah, we're pleased with that. The annex in relation to the build program, which we can come on in a bit more detail later, but the annex units are expecting to complete around summer next year. So further time required from that. The challenge really was that we wanted to bring forward and complete on as many units as possible, which was obviously in the tower. And obviously we need to have a completed building with access in, access out, and obviously the right fire regs and whatnot, which did mean that there had to be in sort of phasing to be able to at least deliver a large proportion of the site whilst we continue on the apex. Do you want to give us a bit more detail on that, Peter, sort of where we see that sort of works over the next few months?
As Joe said, we were concentrating on finishing the tower, and obviously we've experienced some significant delays regarding COVID. COVID's impacted the site quite severely in terms of labour and materials, and hence a delay in the completions. But we got over that. We've pushed forward with the completions, the finishes, etc., which has kind of been a little bit underestimated by the contractor in terms of the speed of delivery of the units. But as Joe said, we've got over that issue now. So as we know, we're waiting for the cover notes to be issued from build zone, and we'll be heading towards the completion of the units. The next stage was, as Joe said, we were concentrating on building out the tower and getting those units finished and occupied. The annex obviously is going to follow that. So over the next 6 months, the remaining units in the annex, which is the former casino area of the shopping centre, will be laid out, designed, constructed, etc. So working closely with the builder to accelerate that that delivery of those units, and hopefully we won't experience the same amount of delays that we've had with the build as we've had experienced on the tower. So hopefully the next 6 months we'll see some good progress on the annex.
Sure. I think it's worth referencing, because I know that you know, anyone watching will appreciate, you know, COVID was one part of the delay, but certainly there were severe delays well before you know, COVID was around, and that was you know, challenges with the original contractor, wasn't it?
I think we've had a series of issues with contractors. I think we've been through, this is the third iteration of contractors on this particular site, and as we've lost one contractor, then obviously it's the mobilisation and gearing up with the next contractor. And unfortunately, that contractor, the second contractor, failed, and again it's re-gearing up for another contractor to take the units forward further. So obviously we've experienced those lags in production whilst we've sourced, procured the new contractors to build out.
I think I mean, certainly, you know, lesson learned. I mean, that, you know, our track history on delivering PDR up until, you know, pretty much this development has been impeccable. We've delivered and we continue to deliver on time, and you know, a lot of cases on these conversion works, you know, ahead of schedule. So you know, your experience here hasn't been commonplace. I think that you know, an unfortunate run on contractors. You know, it is slightly outside of our traditional location, being down south as far as it is. So maybe that's a lesson learned just on the sort of, you know, the management. But you know, the vast majority of our work is obviously sort of West Midlands, Birmingham Central particularly, which is the new build developments. And I know we've got some of our clients that are on today have bought you know, multiple units from Prosperity. So Chartwell just been you know, one particular development where they have bought into developments in the city, and obviously experienced a different timeline and a different experience. Okay, so moving on. We'll have some Q&As at the end. So what I want to do really is obviously sort of you know, we don't want to skim over anything this morning, and we're keen to sort of cover any questions. So if we kind of run through, you know, where we are, and then feel free to answer any questions. There's a little prompter sort of midway through, so I'll mention that again. Okay, so hopefully you'd have started to see these images come through. So we've got the lobby. The kitchen, so there's a couple of kitchens to show you. So that's the light, and then we've got the slightly darker fitted there with the well, same cabinets but with the darker worktop and different flooring. A couple of bedroom shots, obviously just very clean. I mean, what these don't show you is the views, which I think is one of the key points of, you know, sort of fantastic views out of pretty much all the levels. Duplex staircase. So for those that have bought duplexes, again, these are some shots that were taken over the last couple of weeks, and then all the way there. Bathroom, so you can see the kind of, you know, the upspec compared to sort of, you know, where we were initially with sort of splashbacks. We've gone full marble tiling throughout, upgrades on both kitchens, bathrooms, you know, fitments around the apartments generally, and certainly the lobby area as well. So we've got just a bit of an update on the mortgage market. So very much COVID related. This is in a sort of a cocktail of sort of areas of the industry that you know, are slowing matters down. So I know that a lot of people on the webinar this morning are either in process of getting a mortgage or have come out the other end and got a mortgage offer. Certainly, we've got around 30 plus clients that are ready to complete as soon as the warranty. So there's already sort of 15, 17 mortgage offers, you know, within that. So they're starting to come through now. We were early, and gladly, you know, we've managed to make sort of good progress. But generally, you know, the lending market currently is not where it has been. You know, lenders are coming back into the market, and that's been sort of well documented now. But sort of going from sort of lockdown number one, you know, we did see a lot of lenders leave the market. unsure which way the market was going to go. Fortunately, obviously, it's carried on sort of rallying on, surprisingly. But yeah, so we've seen the lenders coming back into the market since. The buy-to-let sector's very much been serviced by the specialist market at the moment. So it's not traditionally sort of high street lenders, but the specialist market is a competitive environment now. So we are seeing a lot better rates out of the specialist end of the market. And that's pretty typical of kind of where the market sits sometimes. With any sort of negative or uncertain times, with obviously and certainly COVID was one of those, or had the potential to be. We experienced the sort of primarily the high street come out of the market first, and then the sort of specialist lenders sort of bolster the market and probably come in with more competitive products looking to sort of capture some market share. So you've got a bit of volatility in there. That's the point really, as far as lenders leaving, lenders coming in. So certain lenders that are in play, sort of 6 months ago, where we might have started talking about mortgage lending, are now out of the market, and then there's other lenders that have come in to take their place. But obviously that means a bit of uncertainty and sort of in some cases some delays. Timescales for decisions. And the general underwriting process has been delayed. We've seen applications across the board. So we're currently completing on 4 developments, aside from Chartwell, which where we've seen sort of similar sort of delays, borne by remote working in some cases. A lot of the back office staff are working remotely. Obviously processing cases has been delayed time-wise, and surveyors remain cautious. So surveyors are down valuing per se. A lot of valuations are coming in slightly lighter, with a caveat around COVID and what that might mean for the market over the next few years. Again, sort of the surveyors very early with any kind of uncertainty. They're concerned of their PI insurance. And the easiest way to protect themselves is just to sort of come in at lower values. So that's something we're experiencing as well. So the cocktail of those sort of 3 sort of key events in the market has meant that the mortgage market's been disturbed and not transacting as normal. So things are flattening out now, and sort of things are getting a bit back to normal. I think as you can see, we're office based and now sort of working from the office, which we weren't under the first lockdown. But yeah, so things are improving, but I think again, your experience has probably not been typical, because working through a completion, if there's mortgage funding in place for those completions, for your completions, through the sort of COVID scenario with lenders has provided a challenge. This article was from Zoopla, sort of earlier in the month, just about the lenders coming back into the market. Lettings and management. So this is rather than a sort of across the country sort of an overall headlines. These are very much just our current management book. So an element of each of the clients that buy through Prosperity, kind of at the point of completion, we retain those within our management division. So we've currently just got over 800 units within that book. So all this data is very much live from that data. Very strong tenant demand. 98% occupancy across our book. Doesn't include London, but across the sort of the UK as a whole, excluding London. So really high occupancy rates. Some buildings within obviously that portfolio fully let, with waiting lists or sort of applicants pending on if anyone should move out, and that's reducing the average void dates. So we've seen that come down to 13 days. So typically, I think that within a 2-week period, a tenant's moved out and another tenant's moved in. So good news for sort of continued income flow. We've seen an rental increase across the UK and across our book of just under 7%. So a sort of upward trajectory in relation to what we can command for rentals, and that's certainly the case, particularly in Southend, where strong rental demand. There's a strong activity and sort of waiting list for units as they complete. we're all geared up for getting these units tenanted very quickly, so we can just sort of look to you know, sort of reduce any further delays, get you completed and get it tenanted and get some income coming in. And then the positive around sort of both lockdown number 1 and then lockdown number 2, where there has been rental holidays or payment holidays, mortgage holidays, all the things that are suggested and offered by UK government currently. We're seeing very few of those, so less than 5% of our tenant base, and this is pretty typical across the UK generally. You know, they have asked for rental holidays or rental payment holidays. So obviously recognising that there's you know, there would be a balloon of debt at the end of it should they ask for that. So other than the kind of some of the usual suspects that you'd probably question would you know, ask for payment holidays anyway. You know, we've seen very few that we relate to, you know, to COVID. So on the whole, people have retained incomes, particularly within the sort of, you know, the working professionals that we work with on the rental book, and that's proven that you know, we've seen very few requests for any payment holidays in rental. So positive. Okay, so just wanted to mention the Q&A. So I'm just going to. There's about a 30-second lag time for the end of the seminar for us, and then for what you see. So I'm just flagging that now. So if you do want to sort of type in any questions, feel free to ask any questions, and we can come back to those at the end. And then in the meantime, I'll just sort of tell you a bit about the group generally, where we are, and sort of current development. So just as a sort of as a filler whilst you're typing in your questions. So the current portfolio, as a developer, we continue to grow on our 39th. There's 39 projects currently within the portfolio, just over 400 million, and 85% of those are pre-sold, which is very much the business model that you know. Current recent developments completed, alongside obviously now Sherwood. We've got Chartwell. We've got Chartwell Plaza, Sherwood Square, and just recently H1 in Halifax and H2 in Halifax. So those 36 units become around 100 units because both phases now, H1 and H2, are complete. So Chartwell Plaza, similar sort of development to Chartwell. It's 143 units in this one, and that's all handed over. 90% occupancy in that building at the moment. Sherwood Square, slightly smaller. It was a new build on the front, 24 with 44 on the back. Again, completed, handed over, and again, very strong rental. So anyone that's in the audience that may well own one of these as well, we've tenanted them as we've completed. So again, very strong. Current developments, we've got JQ Rise, the balance of, we've got about 40 units left here. So this is our 24-storey tower in central Birmingham, new build, due on site in January. And another smaller development in Nottingham. We do like Nottingham, 21 units there, conversion, and again, we're due on site there early part of next year with completions due 2022. Prosperity Homes is due to launch over the coming weeks as we get into January. There is an evolution as a developer, so we do the conversion work such as Chartwell Plaza, we do new builds such as JQR in Birmingham City Centre, and Prosperity Homes is our new division. So we now have secured an owner site in Downham Market, which is for 300 units. There will be owner occupiers primarily. There will be an investor allocation. These are 1, 2, 3 and 4 bedroom homes, freehold. So these are available on the monthly payment plans, but yeah, certainly as we evolve as a developer, you know, housing was always part of the plan. So we're pleased to advise that we're bringing forward those developments now. Okay, so a few questions coming in. Let's have a quick look at this one, see which ones. We've got quite a few come in. So here's the first one. I have no mortgage. I have paid the value of the unit. I do not need to have a valuation for a mortgage, but would like to get information regarding the valuation of my unit. Can Prosperity help with this? For sure. Yeah, I mean, we can provide some current values. across the board. It'd be good if you could, call in and give us a call, or if you can let me know who you are, I can come back to you with a schedule subject to what unit you own and what that sort of valuation looks like as a market appraisal. Obviously we can do that quite simply, or we're happy to advise of a panel of valuers that can provide you with a written certified valuation of your property. The values in Southend are obviously significantly higher. A general look on Rightmove. I probably won't go into specific values because obviously there's quite a range of different types and sizes and sort of shapes. But a look on Rightmove is a good place, and sort of doing your own research into sort of what these capital values look like now is significantly higher to where you bought in. Obviously, certainly in the early days. So we've seen really good capital values, and I think as a trade-off, I'd like to think that was in some way compensationary of obviously the sort of the timelines that have dragged on this one, but obviously in a rising market, that's a positive end to on the to the end of the journey. So yeah, for sure. I mean, we can help with that, and other than confirming that capital values have significantly increased, and from your own due diligence and sort of own review of sort of the obvious portals, you can sort of put in what a 1 bed's worth or 2 beds worth, and sort of get a good idea of sort of what equivalent developments are going for, but significantly higher than where the buy-in was off plan. But yeah, if you want to drop me a note, I can can organise a valuation or provide any further information you need. As a cash buyer, so this is Dion. As a cash buyer, how long can I expect it to take for completion? My lettings agency is waiting to advertise and has interest in the complex already. Okay, so yeah, I mean that is days away. I mean, completion as a cash buyer, you'll be one of the very first batch to sort of to go through with the clients that have got mortgage offers pending. The solicitors have everything. The solicitors are waiting and ready to complete on the back of the warranties being provided. We're just days away from getting those now. So we are gearing up for sort of completions from next week really. So, and the great news obviously is, as you say, you've got a tenant waiting, which we have, whether that be within the Lamont portfolio or your own direct. We have tenants waiting. So let's get these completed. And let's get some income coming in, so we can sort of start to appreciate what your original investment was. Do you anticipate further delays in the annex? I'll say no to that, and I'll say no to that on the basis that I think really the delays to date have been on the back of the sort of our sort of unfortunate role of contractors. So contractors in this space can be a challenge for them to deliver on the specification and sort of timescales that we require. As a developer, we always find that taking a quite a proactive stance is the way to go, because once contractors sort of go off the boil, you can sort of try and work with them as we do for a short amount of time. But certainly once they kind of go off the ball, that can be a kind of a quite a systemic problem, and sort of things don't always improve in our experience. So we will sort of take contractors out relatively early in the process if we think that they're not able to deliver to the specification and timescale. We are on our third contractor, but someone that we've worked with historically on other jobs has been brought in to finish off some of the to conclude the scheme. So they continue to now work through having handed over the tower into the annex. So we are very confident that we'll hit timescales on the annex, because we're now COVID compliant. We've now got a contractor in place that is delivering on the specification and the timescales that we set out. So we do believe now we're on the home run, and having handed over the vast majority of the development, sort of the final sort of third will be within the annex, and that should certainly stay on track. Okay, I noticed that the efficiency rating is very low for the completed flats in the tower block. Will the rating be better in the first flats in the annex? If not, will Prosperity Wealth improve the rating later? I'll pass that on to you, Peter.
The flats in the annex, obviously the issue you have with the ratings is the external facade, where we've got existing concrete panels with glazing, and we do improve the insulation behind the concrete panels, but there's only a certain amount you can do to improve that efficiency through that facade,
particularly now.
With the annex building, one of the complications that we had with the tower was separating the services from the shopping centre and separating it from the shopping centre from the tower. All those enabling works have been done, and they've been done and also been carried out for the annex. So there should be none of the enabling works or the separation issues that we had with the tower on the annex. The annex has an internal light well atrium, and so there's an element of new build which will improve the external facades in terms of the energy rating. So all in all, we should expect that the annex build should be far more efficient in terms of energy than the tower, and that's what you generally expect with new build as opposed to conversions. The energy ratings on conversion build is always a challenge, as opposed to new build, where you can design and build to the latest current regs and improve the efficiencies of the building.
And as I say, particularly now, because obviously with the EWS 1 form, whereas installation, as Peter mentioned, would be sort of behind that cladding. Obviously, we stay away from cladding now generally, and certainly wouldn't be putting insulation, within a sort of cladding buildings as developer has done historically. I mean,
it's a big challenge for the industry. It's moving from insulation materials that can burn to insulation materials that don't, and the mineral fibre, the rock walls, etc., generally don't give that same quality of thermal insulation as the petrochemicals do. So there's a challenge there, and the challenge is that the thickness of the insulation needs to be a lot wider, or the wall cavities need to be a lot wider to accommodate the bigger depth of insulation required, as opposed to the expanded foam that was generally used in the past, which obviously has issues with burning and are being banned. So that's a big challenge for the industry, and that's a big challenge going forward, is to seek those alternative products to provide that insulation and that thermal efficiency.
Okay, well, we're out of questions now, and we've been just double check. Yeah, that's all of them. So that's the end of our presentation and Q&A. Obviously, we are here in the office, available and ready to take any calls should you have any questions or anything else you need to know. The operations team that you'll be interacting with, obviously, point of contact there for any information on your completion. So hopefully you feel informed, not only by this of sort of where we are on site to working with the team, but obviously any questions, queries, or comments, always happy to hear them. So feel free to drop us a note, give us a call. But yeah, thanks for joining us this morning, or afternoon or evening, subject to where you are. Thanks again, and we're going to sign off. Thank you.
Thank you.